All right, welcome back, everyone. I hope you are fine and well. So it's another session like we used to, where we talk about everyday trading. I'm going to share my signals, and you can see right here in front of you, we have our videos all published, recorded, posted right here. So you might be a good person. I mean, you might be a good, I don't want to say you might be a good lad. That wouldn't be cool. All right. So I will implore us to do what to kindly subscribe to our YouTube channel. It's been long. I copy and paste the link. So let me do that right now. So use the link to subscribe to the YouTube channel, like the video, subscribe, follow, and share. All right. Do everything they used to do on social media. We are also on LinkedIn. We also have IG page. You might want to just try as much as possible to be part of us at Edu Center Africa. All we do is just basically training, live trading, and we remove the BS, and I just give it to you the way it is. Okay, profit, loss, education, everything involved. Okay, in trading, psychological fundamentals. Okay, just every single thing that you need to equip yourself as a what as a trader. That's everything I share with us on this call. And I would really appreciate it if we all do what if we all get back, if we all join us in this journey. All right, as we proceed together. So moving forward to the fundamental part of today's session. So earlier this morning, we had a news, the cash rate in Australian dollar. Okay, in Australia, literally, they released their interest rate. And as you can see right here, it came just as expected. The market was expecting, I mean, the Reserve Bank of Australia had already said they are not going to cut rate. Okay, and that was what they did. They didn't cut rate. As a matter of fact, the same thing is happening in the pound in the United Kingdom right now, and the United States, which is most especially, they are also leaning towards not cutting rates per se. At the same time, they're still considering if they're going to cut, they should actually cut deeper, maybe 50 basis points. But the percentage of the Fed, US Fed, cutting 50 basis point is still below 60%. Okay, but there is a talk between the FOMC member, I mean, FOMC committee literally, that they should cut a bit deeper this time if they're ever going to cut anyway. So we might get the cut is still between 25 basis points and what and 50 basis points. So we're going to see that happen next week, Wednesday. All right. So that is where we are right now on fundamentals. Anyways, so moving forward, we have so later today, also by 5:30 a.m., we have the Reserve Bank of Australian press conference. You know, after the bank rate, the cash rate, there's always what there's always a press conference. So that is what all of that's what that means literally. And today also from the 10th of December to 15th of December, which is from yesterday, or is it today? Okay, I think it's from today to maybe Saturday or Sunday, literally. The Chinese yuan will be having a new loan meeting. Okay, they're gonna be running the show back and forth, back and forth. Okay, so with the previous was 500 billion yuan. So right now, probably it's the market is forecasting a little bit higher, maybe 450 billion higher than previous. So if you get something around maybe 1 trillion, okay, then that is good. Okay, that means good for Chinese yuan. But anything below 950 billion, it is not going to be very, very good for the currency, which is Chinese yuan. And then later today, which is like tentatively, we have the OPEC meeting. Okay, the meeting is all day, every day today. So it's if you're trading WTI, you might see some sporadic move. Okay, if you're trading oil, if you're trading anything related to energy, including gold, all right, you might see a little bit of sporadicity in the market, especially on WTI, which is crude oil, natural gas. All those assets will be very volatile today, tomorrow, and probably for the rest of the week. So you want to be very, very cautious, and you want to be patient at the same time. Okay, you don't want to force the market at all. So on that note, guys, let's jump straight into the technical part of today's session. All right, so welcome back. This is where we are right now on the technical part of the session. We're going to be starting with the trade I have running. So this is USDCHF and it's a show. All right, it's what? It's a show. I genuinely can't say that I really understand what is driving this market for now, but I can picture the fundamentals having a play and having a say in all of this. However, the trade is still very much active on my account, and definitely I am not going to be messing around with it because, as a matter of fact, like I told you, I'm only risking 0.3% on all these trades right now. Okay, before I can get back to risking 0.5%, my usual 1%, it's gonna be maybe in February or maybe late March. All right. So, but right now I'm still risking very little. On this account right now, I'm only risking $15, $15 to $20. That's what I'm risking right now. But like I said, 0.3%. All right, that's what I'm risking on this trade. The same thing on GU. I was buying GU yesterday, and it's in a little bit of what? Of a mess right now. Okay, it's in a bit of a mess right now. So I'm still holding this trade. See how it goes. Okay, we see how it goes. My stop loss is still right below here. All right, so I'm watching it very closely. I'll see how it goes on GU. The other trade I was holding, I want to take another sell below here if possible. But right now, I got out of EU already because of the shift of market momentum. Okay, of the shift of market momentum. So in similar, you might want to probably take a small profit from this trade, or probably put your trailing stop very closely. All right. So you because for surprise, because the market can also just tank, okay, can drop down heavily. So you might want to be careful on that one. Okay. And all of that said, okay, all of that said, I'm still watching this, and it's there because of literally because of my journal, all right, because of journaling. That is the major reason why I have that right there. Okay, and I'm taking a screenshot and I want to post it on this page so I have one or two things to talk about when it comes to the currency strength. Okay, but not now. So let's go on. So that is that on euro dollar. I'm still looking forward to probably take a further sell in this market. If it break below here, all right, if it break below here, I will probably consider a short opportunity right below there. Okay, possibly. Okay, possibly. There's no assurance yet because it's still staying above this major structure right at the top here. So if it breaks below here, definitely I will give it a shot. If not, I guess the buyers would probably take the market all the way to the top. But that is still fingers crossed. USD card, on the other hand, seems to be going back up right now. I already closed this trade out. All right, I closed it this morning around this place. So I'm already out of this trade in 1:2% profit, which is really good. Okay, it's really, really fancy trade. All right, it took a very long time before I was able to get myself out of this trade, even though I've already closed 90% of the position itself. But so far, so good. It's not a bad trade at all. It is definitely not a bad trade. It's not the kind of trade I would categorize as a bad trade. Although I didn't manage it appropriately or properly, let me put it that way. I didn't manage it properly because of this pressure. And that's another thing I used to. I've seen this before, but it's been a very long time since I see this. When the market will put me in a very deep pressure, but my stop loss is strong enough to catch the trade, to catch the pressure. All right. So it's been long because I've been on a winning streak for a very long time. I've forgotten the usual show in the market. So now it's just like a remembrance for me. And I really like the fact that I'm being remembered and I'm being humbled again. Like just not like humble, like in a way that it blows up accounts. No, I'm being humbled in the best way possible. And that is really good. Okay. So that is part of the thing I said. Part of the reason why I said it's always very important that you keep your calm, keep your cool on every trade. Okay. Don't force it. Don't rush out. Don't rush in. All right. I rushed out of this trade with over 85% of the position I closed, and I only had maybe just 15% of the position. If I was risking, let's assume this trade was the TP was supposed to be $75 initially. I was only able to close roughly around $20 out of this trade, from $75 to 20. You see the craziness. That's what I'm talking about. It was very, very, very painful. All right. This $75 could have actually closed like two of my drawdowns already, two straight up. All right. But like I said, it's part of the game. All right. It's part of the game. You have to learn, you have to earn, you have to get your emotions together. You have to make sure you're doing the right thing every now and then to make sure you remain stable in the market. We are trading a very complex environment. Okay. We are trading against crazy systems, big banks, big money, people that went to university to actually study the market. Okay, it's just like you're fighting a professional boxer and you've never for once in your life hit the gym and you're trying to fight a professional boxer. Just like let's assume Christian and Anthony Joshua is just they put on the ring to fight. I'm talking about a professional fight. Just can anyone guess how long Christian will last in the ring? If we have Anthony Joshua and Christian in the same ring, they want to fight for the world heavyweight champion. Okay, maybe mid best actually. Okay, it doesn't even have to be heavyweight. Okay, maybe mid All right. How long do you think Christian will last? Can you drop the message on the group? All right. Just to know. So that will give you an understanding of what we are trying to do here. Okay. Yes, Christian has exercised maybe the past couple of weeks. He has hit the gym, do some push-up every now and then for like 3, 4, 5 weeks and stuff like that. But he's trying to fight someone that all his life, all he knows is what boxing. All right. So I think I have only one answer. Only two blows. It might be it might be as simple as that, honestly. Only two straight, very interesting blows. I mean, just some very one in the neck and one in the forehead. You know what I'm saying? One in the neck and one in the forehead, and that is all for Christian for the rest of the round. So it is just as it. So don't get it caught up. Don't get pressed or perplexed when you lose a trade. Okay, just keep going. Keep going. You know you have an edge. You know you have a system. Just keep going. Keep going at it. You do it. All right. So that is what we are trying to do here, and I'm always going to be here to do it, to walk you through this gradually and basically. All right, so that's that. So Aussie dollar is the other trade that I took yesterday. I mean, I took this one. You can see the pressure also. You can see the crazy pressure that he exerted on the price and on our Christian can't answer the question. Christian is scared. All right. Maybe he's a boxer. Who knows? Well, I'm not sure he's going to be able to stand against Anthony Joshua more than one round anyway. I doubt it. Nah. Unless he's just running up and down the ring, like without any punch on it. It's just, those kind of yeah films or movies that you see that the person is just running up and down the rings until they ring the bell. So probably that could be the only reason why it will last one round, a round. If not, man, just a nice punch in the neck or maybe in the lower abdominal part of the stomach. Yeah, he's definitely not going to hit for like the next 7 months. I'm guessing. I'm just saying. I'm just saying. Christian has to say his own part, anyways. Maybe he's a very good and he's a professional professional boxer. All right. So anyway, we see. So moving forward, this is Aussie dollar trade, and we all know the reason why we had a dump in in Australian dollar. It's literally because of the interest rates. I mean, yeah, the interest rate that was released today that was remain unchanged, and the market take that as what? As bearish. All right, market take it as as a bearish, as an hawkish, excuse me, as a dovish data, and that is why the sentiment is still going to the downside. Although the market is the trade is still right there. Okay, we have to wait. If you left this trade already, I guess it's part of the thing, right? It's part of what we're talking about. The pressure, the getting caught up early and all stuff like that. Okay, it's always normal. Okay, the people used to say you have to avoid the stop loss ons. There's no way to avoid stop loss ons. Okay, no matter if you avoid it wrong, if you avoid it now, who tells you you can avoid it next time? Okay, there is no perfect strategy. There is no perfect thing. Okay, there is no right or wrong. All right. So that will be that. So let's jump straight into DXY properly. I think we have a answer from Christian. If I can survive the Forex market, I can survive up to 5 rounds from the boxer. You can even imagine. He said from the boxer. He didn't even know who we are talking about. You can imagine that he definitely don't know who we are talking about. We are talking about Anthony Joshua here. But the fact that he even said from the boxer kind of shows that you are definitely not going to last 2 seconds because you only need to say him and you just fall down. Like literally, you just fall down and be like, uh-oh, I'm dead. All right. There's something like that. It can be probably a temporary cardiac arrest and just catch you and be like, uh-oh, I'm not here anymore. All right. Stuff like that. I'm just kidding though. God forbid cardiac arrest. But anyways, let's move forward. So you can see what is dragging the market all the way to the top right here. That is making a trade on GU and USD kind of like it's putting under a lot of pressure right now because of DXY. DXY seems to be gaining some traction. It's gaining some momentum towards the upside. Since it broke back inside this range, it's been what? It's been ranging gradually and moving towards the upside. And yes, I wanted to share something with you. Comes January, I will be sharing my Forex screener with you. Okay, this is how I update this every now and then. Okay, it helps me position myself when it comes to trading. Okay, you can see I have USD, I have GBP, I have all the fundamentals. They have been copulated into one particular place where I can now pick them and then we can trade alongside with them. This will give us a better edge in the market, a better edge. It will show us a better way to trade. Okay, it will also give us an insight on the pair to sell and the pair to buy and stuff like that. Okay, you can see that so far so good. You can see throughout November, you can see how bearish GU was. And if you check November, GU was literally dropping like wildfire. All right. So that is another reason. You can see NZD also quite bearish. You can see AU, the euro dollar also. Euro was bearish, but you can see dollar. We have bullish, we have neutral, we have bullish, we have neutral, bullish, 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 and then we have just a very tiny bearish. So I would still say dollar is a little bit what a little bit strong. And the reason why we have this small bearish is because of the unemployment claim that came shorter than expected. We have a positive NFP though. I've not really updated this. Okay, this month we have a very positive NFP. So this was already bullish anyways. So we've not the CPI hasn't been released for this month. The GDP is still quite bearish because the quarterly GDP, the one that was released in September was still quite bearish. Okay, it fell from 3% to 2.8%, which is not quite good. The hourly earnings this month was quite good, all right, the one for November, and the interest rate is still expected to drop by 0.5% or 2.5%, okay, or 25 basis points or 50 basis points, the same thing as 0.5% or 0.25%, all right, still the same thing. So overall, we have a stronger dollar fundamentally, and you can see JPY is kind of mixed also. We have quite some bearish signal, we have some bullish reading, and then we have a couple of what bearish reading as well. The same thing for CAD. You can see we have more bullish reading than bearish right here, and then we have some mixed. Reason why you can see what is happening to CAD right now. Okay, we have multiple data that are not even being released. It's only service PMI and trade balance that came bullish as far as I'm concerned concerning CAD. The remaining pair are just quite bearish. And if you come to CHF, you will see the reason why CHF, we are taking a sell on CHF right now because you can see that it is quite strong. Okay, we have very small number of what of dovish number. The manufacturing PMI was shorter than expected, generally because it's even below 50. So that is signaling what a contrast in the manufacturing activities. And you can see the GDP also came shorter than expected, the quarterly GDP anyways. But you can see the unemployment claim also, okay, it came higher, a little bit higher than expected, which is not good. It's a bad reading, but we just say it came stronger. All right, the PPI has not been released. The employment rate, or what was it called again? The job data have not really integrated that yet. But we have some really good, the interest rate remain the same. And we have the CPI also, the inflation rate remain the same, it doesn't change. So the economy is quite strong. And that's why I was selling USDCHF. I'm leaning towards selling USDCHF right now because these are current and updated data. You can see that's why we have CHF regaining some traction, getting some strength. Okay, these are things I'll be sharing with us and we'll be making use of during our activities come January. All right, this is about to get blown off. Okay, we are not just going to be trading technicals right now. We're going to be mixing with a lot of fundamentals, a whole lot of interesting stuff. And believe me, you're not ready. Okay, I'm not sure any of us is actually ready for what is coming in January. All right, but definitely these are not going to be free. Believe me, it's not going to be free. But just for a token, monthly subscription, it might even be just a token. If I tell you the amount, you're going to be shocked. Just a token. So, anyways, let's go on. So DXY, so far so good. So far so good. We have a very good opportunity. Possibly, if the market cross above here, that is the only reason, or probably the place I will start looking for a bullish reading. And before we can see this bullish, this uprise, definitely I will be expecting, what's it called again? I will be expecting a bullish reading as regard the CPI that will be coming later, probably this week or next week. Okay, I'll be expecting a bullish reading on the CPI. I'll be expecting a bullish reading on the PPI as well. And probably we already have a very good job, which is NFP. And unemployment rate is not that very good. Okay, we have the retail sales that can be factored into what happens to DXY come next year. All right, come next year, literally, and how it goes forward this year as well. So that is part of the deal, okay, and that would also be probably DXY break the upside as I was expecting earlier, as I was explaining earlier, probably break the upside. Let me make sure I reduce this very nicely. Okay, so I'm going to reduce this right now. Yeah, so if it breaks above here, that would be nice. Or if the CPI, the PPI, everything, the shebangs that I've just explained to you, if they all came shorter than expected, and then we have the service PMI, manufacturing PMI also came shorter because these are all for what? For October. We've not really seen the one for November yet, all right? But the trade balance that was released last week also came quite good, okay? They were running deficit of 83.8 billion before, and the current trade balance was up by it was currently at $73.84 billion. All right. So it was up a little bit, which is very good for for the manufacturers and for the economy generally. So that is part of the whole thing right now that we have to pay close attention to. So like I said, I'm gonna bring fundamentals to the game and we're gonna be using it very, very well moving forward. So but definitely this is all part of the plan for next year. of course. So back to technical because we can't I can't trade with fundamentals. I can understand the economy with fundamentals, but I can't trade fundamentals. It's very complex, very complicated. The only way I can still trade is with my technicals, and that is why I'm still quite bearish. All right. And considering the fact that on the 1 hour time frame, which is not that much of a time frame anyways, but it is a very stable time frame that I personally respect, and it has made me consistent profit. And that is why I'm guys, like it quickly one or two things. All right, and then I'll be right. All right, so these are the two plans on DXY, and that is where I will be waiting for. However, we have a crossover right here. Okay, it's decent. We've seen this crossover so many times, and the market just move in that direction and just break all the major structures, the major trailer and the rest. But right here, you can see we are having a little bit of a range, and that started since the 29th of November, which is not that far away. Okay, it wasn't a long time ago, in my personal opinion. All right, so best we can do now is to wait to see what happened at the break of this range right here. Once it is broken, we're going to mix it with the fundamentals as it is stated at the top there, and then every other thing we just follow suit. Okay, so that would be that in my opinion. So USD I'm still holding this short opportunity considering what I can see on the fundamentals, although the bullish pressure that is just resuming back to DXY is putting the trade in a lot of pressure right now. But like I said, I'm built different and I don't really care about the current momentum. And with the fundamental I have here, we are seeing a broader view of Swiss franc gaining some very good strength. Okay, aside this, what's it called again? The GDP that came shorter, the quarterly GDP, anyways. Okay, and the unemployment rate is also higher than expected. I mean, it came higher in October. So we've not really seen the actualized data for this month. Okay, I mean, the November data that we're going to use to analyze the market for this month just yet. But based on the past data, which is the October numbers, we can see that we have all this. The trade balance was quite good. Retail sales is good. That means the inflation is also quite interesting. Okay, that means it's not going up, probably going down gradually. And as you can see, it remains stable. Inflation and the interest rate is also, it wasn't going up. As a matter of fact, there was no serious forecast that it's gonna increase in the nearest future or whatever. Okay, based on the one the market is coming, the one that will be released this month, basically, it's still forecasted to remain the same. So all that said, we just have to wait. The manufacturing PMI also kind of like tick with the one for the United States dollar. You can see it is below 50, which is indicating a reduction or a contraction in the manufacturing activities in Switzerland. But all of that is still signaling to one thing, because we can't trade all of this until we get a very good move in the technical part of the market. And that is where I am right now. I would like to see how all this goes in the next couple of hours. And if I ended up closing this trade in a loss, that would be fine also. Meaning all this is just a false breakout. All right. But I'm still holding the trade and I would like to see how it goes overall moving forward. For buy trade, I don't have any plan to buy right now, since the market already indicates a lower low, lower high, lower low, probably a lower high. Maybe the lower high is just going to be a bit deeper, or probably we're testing this particular trend line before we fall further, which I will take again. All right. If the market ends up breaking above here and come to the top here, I will still take another sell to the downside. Okay. Unless it decides to continue to range, then probably I will lose that one too. And then I will just wait for the market to break structure again. It's always about going back again and again and again and again to make decision. All right. Loss is inevitable, but profit is also kind of sure. All right. So you just have to make sure you plan yourself very well. Like I said, I'm only risking 0.3% on this trade. If I lose 3 trades altogether, it's not up to 1% of my account. It's not even up to 1%. So I'm not fixed on that. That's why I'm telling you guys, come January, go get good money. Okay, nothing below $200. Come on. If you want to make money, make it. If you want to play around on demo account. Is a waste of everybody's time. Okay, if you want to make good money, fund $200, relax, risk $5 per trade, and when the profits come, that way you can take a loss 10 times. Okay, when the profit comes, just have to make it like 2-3 trades alone will cover all your losses. You can take a loss of 5 times, 6 times, not with your $50 that if you take $5 loss 3-4 times, the account is already on the download. Okay, it's already crazy, perplexed. Okay, don't trade anything below $200. Okay, So moving on to euro dollar right now. Euro dollar is still selling. I hope Mr. Anderson is still holding the sell, but make sure you are trading this because I'm seeing a change in the momentum soon enough. Okay, but if we break below here, believe me, I will also join and add up to the trade. Okay, but my trading stop is very tight right now in EU because I'm seeing a change in direction. I actually thought this is why I took this trade on Friday because I thought the market would just drop and then go back up. All right, that's why I took this. I didn't know it's gonna be this dramatic. If I knew it's gonna be that dramatic, I wouldn't have joined the trade on Friday. But fingers crossed right now. It seems to be the one that is working very well. So let's see how it goes. Okay, very good, very good. Shift the stop loss with break even and just wait for it. All right. So USD card on the other hand is still going back up. I've already closed my trade at the top here. If I get a better pullback after the market, you can don't worry. Card is still it still has so much run to so much play to run at the top. You can see based on the fundamentals, I'm still capping some things on the card. All right, it's still quite weak. It's average right now. Okay, it's still quite average. All right, but is not super strong. Some data has not been released on card except the unemployment rate, the earnings. Okay, the earnings have come. They came out on Friday, and the unemployment rate and all that. So, but the data we're still using right now on card is still the October number. Okay, we've not seen any updated one from November, so we still have to see. We still have to wait to see how that goes. But overall, the earnings dropped this month, and we have the unemployment rate also dropped this month so far. Okay, the interest rate is forecasted to what? To drop. I mean, the last interest rate, which was in, I think, September or November, it dropped by 50 basis points. Okay, GDP also dropped. The quarterly GDP dropped by 0.2%, and the CPI went up. The inflation went up by 40%, which is very good for the currency. So we see how all of this factor into it. We've not really had enough data. Okay, but as time goes on, I will keep updating this. I will keep putting it. I will even see how I can do what how I can make it automated that it has to be uploading itself, okay, gradually, but definitely I have to pay for all of that anyways. No, trading economics is not going to do this for me, and you know how it goes. It's a lot of money. I'm talking about a couple thousands of dollars for all of that to happen. So you can't expect me to be doing all of these things for free. It is not sustainable. All right, not sustainable at all. So, but you have also, I've given you 6 months of test. Okay, so it is fine now. So I think moving forward, if it's $5, if it's $10, you should know that if you didn't make it the first month, second month you make more. Okay, it's a business. That's why you don't want to trade it on the $10 account. You don't want to trade it on $20 account. You don't want to trade it on $50 account. So it won't make sense. It wouldn't make sense. If you have a $500 account, definitely go for it. If you have a $1,000 account, definitely go for it. If you want to buy a prop challenge, I can structure a what's it called? I can structure a risk management plan for you, okay, that will help you scale. And there's some prop challenge that there is a prop firm that even give you a funded account without any challenge. Okay, but they have a very crazy rules that you won't even understand if you read it. I can help you look into them. I can even give you some bullet points on some prop that you can actually buy. Okay, and just come January, okay, and let's make this money together for the rest of the year. I mean, if you want to pay for like the whole January to December, maybe $120 maximum. I might even give you what's it called again? I might even give you a discount or maybe just remove $20 and just pay $100. If you want to pay for the rest of the year, then you know that back to back every day, you don't have to worry per month. You just need to make sure that you have a funded account that you want to trade and make money. All right, make money. So moving forward, USD card on the other hand, that's that. We don't need to talk about USD card. Yes, dollar. I mean, Aussie dollar is the crazy one. All right, the pressure might actually would have scared most of you out. I'm very sure of that. But let's literally stay there. Let's leave it. Let's keep it running. Let's keep it going. USD JPY broke above this structure right at the top there. Is it going back up now? I'm not sure. I don't know. But I would like to see how it goes. Don't forget we have a very strong trend line right around there. And if you're taking a look at the fundamentals, I'm not sure I still have it on my clipboard. But let me paste it if it's still there. Yeah, like I said, I'm not sure it's there. Okay, it's still there. So anything on yen, let's see if there's fundamentals that we can read on yen. Where is yen against JPY? Okay, so currently JPY is still quite weak. Okay, yeah, you can see the trade balance, they're still trading a little bit of deficit, and the deficit is getting bigger and bigger, meaning that the economy is contrasting. The amount they are exporting doesn't the amount they are exporting, let's say in currency or in product that they're exporting doesn't correspond the amount they are importing. They say if you check Nigeria trade balance, your mouth will just open like because what we are importing is crazily bigger than what we are exporting. What we are exporting is literally our crude oil, and what we are importing phones and literally everything. Even toothpicks, we are importing toothpicks right now. Toothbrush, we are importing it because now all these big companies they are leaving Nigeria, right? Guinness left Nigeria. So if you want to drink Guinness now, they have to be, it has to be an imported Guinness. All right, not the one that is made in Ikeja, Lagos, or the one that is made in Abuja or whatever, wherever they have their brewery or whatever. Okay, it has to be imported. So we are spending more money that way than just locally made, but still Guinness, anyways, still the company making it. All right. So that is where trade balance comes in. So back to yen, you can see they have the wage growth comes lower, which is their earnings. Okay, the interest rate also came, just as expected, they are still below 1%. All right. And the GDP also came shorter than normal. Okay, the quarterly GDP. And the CPI was up. Okay, literally we see that most of this currency, the CPI, the inflation actually went up aside dollar in November, the CPI of euro went up. CPI of Kiwi came down. For Aussie, the CPI also came down. For this guy, the CPI was no, it's not all of them, but most of them in a way. Okay, so you can see the fundamentals. I don't want to break it down because we are going to take forever. But definitely, our videos now we have to last for like an hour because I have to walk you through the fundamental story, then walk you through the technical part, and then make very good decisions moving forward. Okay, so the story will be more interesting to us, not just technicals, technicals, technicals. Okay, now I want us to trade not just the technicals, I want us to trade the economy. Okay, because when you understand the fundamentals, you understand the economy, then you can trade it. Okay, that's what I want us to trade come next year. Like I said, I'm not sure most of us are actually ready for this, but let me see how it goes. Moving forward, so as far as yen is concerned, I think this momentum that is going up is from the United States dollar. Is the pressure that comes from the United States dollar, and we see how it goes. But we have this strong line right there. If the market touch it, is it going to get rebounded or is it going to break it? We're going to check the fundamental story, then correlate to be the technicals, and see how we can make money out of this. But right now, I don't have any trade on UJ, but I'm watching it very closely. You can even see I have a notification right at the bottom here. So whatever happens, if the market decides to cross below here, I think we make very good money. Guys, we're going to write some very interesting trends come next year. I can feel it myself. Okay, we wrote some very good trends together last year. I mean, this year, I'm already calling this year last year. God forgive me. Okay, we already wrote some very good trends this year on USDCHF, on USDJPY, on GU. I mean, on so many pairs. We wrote them. Okay, but right now, let's wait. Okay, come next year, if the market is going to trend, we're going to ride it to the end. I mean, we're not going to trail it tightly now. We're going to just follow it back to back, back to back. As it's dropping or pumping, we're going to be following it gradually. Okay, because you know that market will trend in the coming years. This kind of trend, we are all going to be there. Okay, this kind of trend, believe me, this kind of trend, when the market is dropping right here, we are going to be there. All those 700 pips, 600 pips that you use, the kind of trade that you use 0.01, you make $40, you make $60, you make $100. Those are the kind of trade I want us to be picking next year. Those are the kind of trade I want. If it's just going to be 7 trades in a month, I want us to ride some crazy trends that will make some very good money, and then we all live happily ever after. So that is that on USDJPY. So I don't want you to also get excited because I'm super excited anyways. So gold actually broke out yesterday, which is quite good. But now it seems to be going back down. I don't know why this notification is not working anymore. Probably it has gotten triggered and is no more active. But am I going to take a buy on gold right now? Possibly. But can someone tell me the reason I'm not going to take this trade? Because even right inside this range, I didn't get any build up. Okay, when I want to take a trade in a range, I like to see a build up like this, right? Then I will take a buy. But if there's no build up, if there's no zigzag pattern inside the range, I will probably not consider it. And that's why I'm not considering gold buy right now, just for now. All right. Possibly if the market break below here, when I was having a conversation this morning, one of my guys said he was expecting the market to probably come all the way back here before he start looking for buy. And that I can reckon with because now we are going to have like a lower low, lower high, higher high, higher low, higher high, higher low. Now we have a little bit of a zigzag, then we can start to take a buy from the bottom here. But this will be taking a buy inside the range. So that will be quite dramatic. So if I'm going to take a buy, probably wait for it to come back to this bottom here, push back, come back here, then I will take a buy right there. Okay, possibly. But fingers crossed. It is good. All right, it is good. It's not the kind of pair you want to rush into, okay, or you want to force. Okay, this is the kind of pair you want to be patient with and you want to trade appropriately. That's the plan. So silver, on the other hand, silver is also coming down gradually. I think this one will be very much better to trade. Okay, because we've already seen the build up. We have higher high, higher low, higher high, higher low, higher high, higher low. All right, break above here, pull back. I will start taking a buy from it all the way to the top. Okay, now the pressure is over. It's time to just to catch some very good trend and then ride alongside it. And also in my fundamental story so far, I've not really added silver and gold. The only thing I've added on gold is the what's it called again? Is the seasonality. Okay, the seasonality number. That's the only thing I've been able to come up with on gold so far. But as time goes on, I will also add some other interesting fundamentals. By seasonality, this is what I mean. Okay, I will also add some very interesting things to gold, and then we see how it goes moving forward. Okay, you can see this year so far. Yesterday, the market closed negative 0.22%. That's how the market closed yesterday on gold. All right. So the way it closed today, I'm still focusing, or probably I'm leaning towards gold closing bullish this month, December. All right. And you can see in January also, you can see it always seasonality. This is what happens in the past. Okay, you can see in January it's always closed. I mean, on an average, it closed 2.41% on an average every what? Every January. That means if we lean towards buying in January, we might end up making some very good money. And you can see even in February, you can see it's like in the middle, 0.61%. Not super sure. Okay, not super sure. But right here in April, it looks like it closed bullish much more than it closed bearish. So if you're buying in April, it might also be very good. All right. In May, you can see negative. So you might want to be looking for short opportunity in May. In June, also, you might want to be looking for short opportunity. In July, you might want to be looking for buy opportunity. In August, buy opportunity. In September, you can see right here, close bearish. You might want to be looking for short opportunity. You can see so many reds in what? In September, excuse me. In October, you might want to be looking for buy opportunity. In November, short opportunity. And you can see last November, literally November, we took some very good sell on good November after the head and shoulder pattern, and it was really, really interesting. And now we have December. Are we going to get a very good buy? I'm not sure, but I would like to see how it goes. Okay, these are kind of things that we're going to pick together. This thing keeps us in a very, what we are trading, like I used to tell you, technical analysis is what has happened before will happen again. And that's what we trade as a trader. We're using the past to predict the future. That's our job. Okay, that's our job. Use the past to predict the future. So when you are picking a trade, you're not just picking it because you want to, you are picking it because you understand it and you've seen it happen before. Okay, and that is how it goes. Anyways, so moving on to WTI, which is crude oil. Crude oil seems to be in this kind of drama, so we are not having anything to talk about this one. So moving on. NZD USD still in a range, so nothing to talk about it. Also, we're just gonna have to like watch it very closely. But I would say I'm leaning towards bearish. Okay, if we break below here, that would be nice because you can see the moving average crossover still leaning towards bearish, staying above the price right now. So bearishness, yeah, is right there on Kiwi dollar. But is it ready to go down? Probably not. Okay, unless you want to play inside the range, then I wish you all the very best. Lastly, talking about Bitcoin, I took a buy on Bitcoin yesterday, which was not good, right? It wasn't good. It wasn't super good. And since I took a buy, when I took this buy on gold, on Bitcoin, when it got here, I closed the trade somewhere above here. And that gave me like, I think $80 profit. So this trade I lose right here, this is the second trade I'll be taking so far. This second trade closed me out. No, I took the first buy right here, excuse me. I took my first buy right here. I closed this one at $80. Okay. I took a second buy right here. I closed this one at, I think, $15 or so on Saturday when it came back down on Saturday. I put my stop loss slightly below here. When it came back down right here, closed me out at $15. And this is the first loss I'll be taking in all my buys on Bitcoin so far. All right. So that is that anyway. So I mean, it's still quite bullish to me, especially if I look at the chart on the 4-hour time frame when it comes to Bitcoin. Okay, the volatility is crazy, and you don't want to get into it. You don't want it to kill you. Okay, so you have to be very careful on how you approach Bitcoin on 4-hour time on 1-hour time frame. But on 4-hour time frame, it's still very bullish. You can see the 200 period moving average still at the bottom. It's currently at 100 period moving average, and it has already broken below 50 period. So if you can find its way above this area again, pull back nicely, I will look for what buy on Bitcoin for sure. Okay, for what? For sure. Like I said, I'm already taking so much time. You can see people already, today is Tuesday, people have jobs, people have places to be. Not everybody is a full-time trader like myself. So people have to go to work. I don't blame them. All right. So I'm also wrapping up right now. So if I'm going to take a buy on Bitcoin, it's going to be right above there. Okay. I'm going to drop a notification right there now just to be certain. So that will be that, guys. I will see us all tomorrow. If you have any question, don't hesitate to ask. Have a great day. Bye for now.